Welcome to the webinar. You have entered as an attendee in listen-only mode.
At banded oscillation, the levels will usually fluctuate between 0 and 100. So this is the RSI and the period is 14. And you can see that the highs is at about 70. And usually the low is about 30. And there's also the stochastics. We use 533 standardized. And the extreme levels for stochastics, we usually use about 80 and 20. But in real life trading, I'm sure if you open your trading view and you open any indicator, you can easily find some that are 90, 10. You can find those that goes above 90, 95. So in real life, the levels are not exact. So for different asset or different analysis, people would like to take different ranges for the indicators. And other oscillators like ROI and MACD, they are usually unbanded, which means they will have no minimum or no maximum values. And this is up to the traders to manually identify the overbought and oversold lines. So an experienced trader will tell you, oh, I've been analyzing this asset or this security for so many years. And I know that at this level, it usually says that it's an overbought or oversold situation. So this is where experience come into play. And the extreme levels are usually manually determined. And even if there's like a indicator that shows, oh, it's 95, sometimes you still see a continuation in trend before there's a market correction. So indicators can tell us, can sort of indicate reversal of trends, but we should always use graphical price actions and also use our fundamental analysis to sort of understand what's happening in the market before relying on them to look for market corrections. So area of overbought and oversold situations. So extreme momentum readings will likely indicate a possible correction in price. And this is the IMI 14, RSI 14. These signals are usually used by the traders when they want to enter in the market. Oh, so everybody will know that you want to enter in a low price. If you're going for long, you want to enter in a low price and you want to look for a high price to sell. So how do you know where the market will dip? Whether the market will dip even more or it will go reversal into a higher trend, higher price. So when using the IMI and RSI, it can show a bullish signal when it goes below 13. So this means that it's a oversold situation. It's likely that to everybody in the market out there, this is a sort of a lower price where there's a lesser in demand, and then because of the lower demand, the price is at its lowest. And this is where people will start to enter the market because hey, it indicates to everybody that it's a low price, so everybody will now go in the market. And then what happens after this is because when everybody's looking at this, trying to go in the market, it will drive the prices up. And so the reversal of price action happens. And you can see now it's a upward trend. So when people starts buying and then people think that, hey, you'll rise even higher, then you'll become a overbought situation. And here is at above 70. So this is where you know that a lot of people are currently bought this security or asset. So the likelihood is this is at a high price. And if you're going for long, if you're trying to buy in, right, this is not a very good price to go in. So then you see that because the price is at high, everybody in the market is like, oh no, it's very high already. If I don't sell it now, there's a likelihood that the price will decrease sooner. So this like indicates to everybody. And this is where people start selling and selling, and you'll see a downward, the price going down. And then so a cycle happens and it just happens again. So divergence. How we use divergence is we actually compare the price of the security to the movement of an oscillator to see if there's any if there's a difference in the direction. So if the price is making higher highs, so for example the price is going higher, higher and higher, and the oscillator should also by right be making higher highs. But however, if you see the prices going higher highs, and then suddenly like the oscillators and the oscillator is telling you it is going downward. So this is where divergence takes place. And this is like the price and the oscillators are diverging, and it sort of shows us that it is likely that the trend is about to change. So there will be a trend reversal, like just now I mentioned, and we likely forecast a correction in the market. So the types of divergence that we can identify. So there's three different types. The first one is classic, then the hidden, then the complex. So the classic, as it name is goes, it's very straightforward. So if the price is making lower lows and the oscillator is not, this is considered to be a bullish divergence. So you can see here in the price action here, the price is making lower lows. However, in this oscillator here, you can see that instead of going lower, it's actually going higher. So we'll likely forecast the next price action to maybe change trend. So this is for IMI. It can also apply to RSI or other oscillators. So if you see that there's a difference in direction, then it's called a divergence. And this normally occurs at the end of a downward trend. So it can mean that this is the lowest in this period. This is like the lowest that it's gonna be, and the next will be the next trend will be that the price will be upward. And it's called a positive divergence because the price is declining, but it's declining at a slower and slower pace. So it's sort to say that the technical position of this price, this asset is actually improving. So classical divergence can also be bearish. So just now was a bullish example. The bearish is the opposite. If the price is making higher highs, but the oscillator is actually in the other opposite direction, then we have a opposite. We have a bearish divergence. So this will normally occur at the end of a upward trend. So you can see that this is a upward trend, and then it will signal that the price will likely drop as time after that. And as price and momentum, usually price and momentum are expected to move in line with each other. So this is also called a negative divergence because it said that the technical position is deteriorating. And even though the price is rising, as you can see here, it's actually rising at a slower pace. So it's like sort of a momentum that is going to slow and reach here, and then suddenly it might just go down. Yep. So then we learn how to interpret the divergence that we spot. So momentum oscillators, they're usually used as the first and the leading indicator we use when we try to detect the tops and the bottoms. And momentum reversal, they will usually precede the reversal in price. This is therefore a shift of momentum is like a warning that the price reversal will happen soon. And however, not all divergence might result in good signals. So during a very strong trend upward, there might be there might be a divergence, but this divergence might only tell you a small correction in the market, but the general trend might still be upward. So when you analyze divergence, it's important to go by still the monthly, the weekly, daily time frame to zoom down before you see if the divergence is sort of a very strong market correction. So the second type of divergence is actually the bullish divergence, hidden divergence, and this is for the bullish chart. So a hidden bullish divergence occurs when the price falls, but it fails to move lower, and you see the oscillator drops. So you can see in the chart here that the price is actually falling low, low, low. But the price actually falls, but it did not fall lower than this previous price. And you can see that in the oscillators, IMI here, it's actually going lower lows and it's going downward. So this is a hidden bullish divergence. And also for RSI, similarly, you can see that it goes lower lows. So this also occurs at the end of a downward trend and is trying to signal a bullish trend for reversal. So it might be saying that, oh, this is going lower lows, but this might be going higher up after that. So the next trend will be a bullish trend. So then we can look at hidden divergence, the bearish side of it. Similarly, it's the opposite. And it occurs when the price fails to move higher, but the oscillator is rising and making a higher high. So you can see at here, it's going up, it's going up. So this line here is going higher. So here we have sort of like a false lower low, but in the oscillator here, this is going a higher high. So this will also normally occur at the end of a upward trend and will signal a bearish trend reversal. So the next type of divergence. So this will actually put time cycles in when we're into what we analyzed just now, and it's like the price trends interaction with the different time cycles. So most momentum oscillators will reflect only one cycle since they are constructed using a specific look-back period. But when we compare one cycle with another, when we compare two different momentum indicators like ROC and RSI, what we get is we get a divergence between two oscillators of different periods. Here we are actually comparing the ROC of 7 periods and ROC of 14 periods. It is important to compare two time spans that are separated by a substantial interval. So for ROC, we're using maybe 7 and 14. And so at this area here, you can see that although for 7, it's showing higher highs, the oscillator is indicating a upward trend. The 14 period one is indicating a downward trend. So when the shorter period indicator bottom starts to rise towards 0, while the longer continues to lower to new lows, these two cycles are out of sync. So they are not, they are sort of a divergence. Sorry. So on the other hand, the complex divergence can also be bearish. So the similar situation, we have the rate of change here 7 periods, rate of change here 14 periods. And here we can see that for the shorter period indicator, trend and will signal a bearish trend reversal. Okay. So we talked about the strength of the divergence, and one of the indications towards the strength of the divergence is the number of divergence. So the more divergence you can spot in the chart, the greater the strength of this, the greater of their significance. And the more divergence, it and the failure of the price. So the greater sorry. So we say that their significance increase as we spot more divergence. And even though if we spot a divergence, there's the market fails to correct the price. So you do so the divergence tells you that there will be a market correction and this is the end of a trend. But if, for example, the market fails to correct after that, it just means that when it happens, the effects will be more severe. So you'll see a very sharp decrease or very sharp increase in price afterward. And the greater the time between one divergence and another, the greater their significance. So this actually means that if your divergence takes place over a longer period of time, it is a signal or is a higher strength than if it only takes when you spot it in a shorter period of time. And so divergence in a longer period oscillators are considered more important than divergence in a shorter period oscillator. So if you spot a very long trend and then compared to a shorter trend, and the divergence in the longer period will usually be more significant than the one in the shorter period. So strength. Okay, and indication of strength also says when it's close to the equilibrium. So the value of the oscillator at the time of the divergence is very, very important too. When you look at the RSI and the ROC here, they're actually very close to the equilibrium level. And the closer the oscillator is to the equilibrium, the larger the expect effects. So the larger the expected sell off. So next, divergence can form traps. So most of the time, divergence proceed in a fairly orderly way, which means they can get progressively lower or higher according to the direction of the trend. But just as you expect the price to drop, a final rally. Sorry. So then, just as you expect the price to drop right from here, a final rally might develop, and this advance will push the momentum indicator back above at least one or two of its previous peaks. So, sorry. Let me go back. So here you can spot a divergence here, and then you might expect this price to fall all the way down. But then it went all the way high up. So this is where there is a divergence trap in which when you're interpreting using the indicators, the fall actually happens much later than when you predict. So the final move is usually because of some sort of unexpected news event that might cause the short covering, and the short covering ends, there's very little to support how much the price is at. And so suddenly the price you'll see will drop until all the way to very low here. So this is actually called a divergence trap. So in summary, divergence, there's three different types. So there's the classic divergence, which occurs when price makes new high or low, but the oscillator does not. And then there's the hidden divergence when the oscillator makes a new high or low, but the price does not. And so thirdly, there's the complex divergence, which occurs when the longer period oscillators, they'll make a high or low, but the shorter period does not. So this is up to the your experience or what you think it is to actually gauge where the reversal or trend is. And we actually usually look for bearish divergence in an upward trend and a bullish divergence in a downward trend. So what we can say is that although divergence are very useful, they are not the sure tell all in the reversal in trends. And we need to also look for divergence track as I mentioned just now. And divergence do not represent actual buy or sell signals, but they will act as a warning of a possible price reversal. So this is the end of the slides, but I can show you a few examples. Or do you have any questions about the presentation just now? Okay. So if you have any questions. Okay, if there's no questions, I will actually show you an example of maybe how you can spot divergence in a graph. So this is actually cat yen. And then so usually in the 1 hour mark, it's very easy to spot divergence. So maybe we can open up and then we can use the smoother D here. Okay. So immediately at here, okay, so in here, so from this area to this area onward, you can see that it's actually making a lower low. But then price is actually on upward trend. So this is sort of a small divergence that we can see. And then so usually in the smaller time frames, it's easier to spot divergence. And then do you have any questions about the PPT slides just now? You can post and maybe I can answer them about divergence. I finished my slides quite fast. Or doesn't have to be about divergence. It can be anything in general, or if you want to see some sort of analysis about any equity or pairs. Can you show me divergence using RSI? Ah, okay, can. Okay, Kaylin. Thanks, Kaylin, for your question. Okay, so this is the RSI. And then, okay, let me see. So if you go to the 4-hour mark, it takes some time to spot. Okay, maybe I go Aussie dollar easier. Okay, here. And okay, actually easier to spot with the 1-hour one. Okay, yeah, here. Okay, so let me delete this. Okay, so at this point, you can see that actually it's a upward trend. Okay, but however, if you look at here, the line for the oscillator is actually moving downward. So, and so here is like a short. It's actually making higher highs. But then if you look at the RSI indicator here, it's actually moving lower. It's actually on the 1-hour mark. Yeah. Yeah, it's on the 1-hour mark. Sorry, let me see the question. Okay. Okay, the period is here. 14. I'm using 14. So, okay. I can show you another example using dollar CAD. Okay. Okay, so for 4-hour time frame stochastics, and if I so if you look at the recent one, most recent one, this is actually a upward trend. Okay, no, it's here. It's here. Sorry. it's here. It's actually going downwards. And here, it's going upwards. So we can sort of see a divergence here, which signals to us that there might be a market correction. So this is going down. The likely next price action is going up. And this is how it helps us forecast the reversal in trends. Anyone has any more questions? Bobby, I hope just now it answers your question for the period. I don't know, is it for the previous one? So previous one I used 1 hour because there are more divergences, usually more divergence in the 1 hour mark, but it also depends on which pairs you're trading on. Anyone wants to see other pairs or have any questions in general? Anyone wants to see gold? Maybe I can show your gold analysis. Are you able to find divergence silver? Oh, Ryan. Ryan, okay. Ryan wants to see silver. Okay, Ryan, let's go through silver. Okay. So we start with the monthly, and then we can actually sort of see that it's going down here. So then we move to the weekly, and you can see that one crucial price point is here. And then I'll put it here as well. So this is sort of the range they're working with. Then we'll move down to the daily. And then we can see the most recent trend is actually here. So we can draw a Fibonacci line to actually find so you can see that this the lowest price point is actually very close to the minus 27.2. And then can move closer into the 4-hour mark. And we can see that so the most recent change of trend can be this way, but you can see that there's an upward trend here. So can move it here. And I will actually put the second resistance level here. So my second resistance, my first resistance, first resistance goes here, which means that if it goes up, you'll reach here. And then I'll put my second resistance level here in alignment with my 23.6% Fibonacci levels. And I'll actually put this a second. Okay, so there's a recent, the lowest point is here. So I actually put here, sorry. So this is 100% Fibonacci levels. So this is actually my level of support. First level of support. So it's within this range. Then if we look at here, it's actually price is actually hovering around this range, which is around the area of 23.6 and also the bigger trend of 61.8. So actually hovering around here. And we look to the stochastics. So stochastics actually tells us that is already sort of in the overbought situation here. So it's highly likely there's a small it's highly likely. So it's actually a very mixed signal. If you let me choose, I would think that it might go further up to touch the first resistance at go to go first. Okay, then let me close this. Okay, so with gold, just with gold, we can see that for the monthly, there's sort of a downward trend here, but it's slowly coming up. And then we move on to the weekly. The weekly shows that there's sort of a upward trend. This is a unnatural unnatural low price point here. So usually I do not like to take that as into account when I look at the lowest. So for me, it feels like it's going on an upward trend. So we move on to the daily. Okay. And then we will take the most recent low point. So as I mentioned previously, this is a unnatural low point. So I would not use it. And then I'll actually take here because here is downward trend. But here is the recent high points. So I think actually here is a better point because price has tested several times at this level. So we move on to the 4 hourly. Okay, you can see that the trend line can be shortened to this. And you can see that price has been making higher highs if you look at the 4-hour levels. And it touches here very nicely. So the most obvious and most recent trend line we can see is here. So we go from here, and if you use this as a lowest point, you can see that it's actually on an upward trend. Okay, here. So we're going to find our level of support. Our level of support. So I will put a level of support here. If you're a short-term trader, I'll put a level of support here. So this is where in alignment with the 78.6 Fibonacci level and also in alignment with the upward trend line that we identify. So this is a level of support. Okay, which I will put. Then you can see that price has recently tested this level and is starting to go downward. So this, I will use it as my first resistance. So if you zoom in, you can actually see that price might actually touch this, go down a bit to touch this line, but the general trend is that it might still be an uptrend. So if you're looking at stochastics, maybe. So MACD is actually showing that it's a golden cross and there will be a reversal in trend. So you can see it here. So upward. So it will go down. My analysis that my stand is that it will go down a bit, but it will still in the longer term, it will still move up towards its resistance level at 1831.864. So I hope it answers your question for gold, Jess. Um, do you have any questions? Yes, clear. You want to see oil? UK oil? Is UK oil okay? Okay, so okay, sorry. So the same thing, we go to the monthly. And let me close this indicator first. So actually monthly, if you can see the big trend is actually making lower lows. The low points are getting lower. And then we go to the weekly. Okay, weekly we see a upward trend here. However, this might be a correction or this might actually be a continuation. We don't know yet. Okay, then we move to the daily. You can see an uptrend here. And there's a dip. So the dip is actually, price has actually tested several times here. So I'm going to put a level here. And then we go to the 4-hourly mark. So we can see that price is actually dipping, but it tested many times here. So I'm going to put a level here. And if we zoom in even more, if you're short-term trader, I'll say recently price has tested many times here. Okay. And the most recent, let me. Okay. Why it doesn't work? Okay. Okay. Better. So price has tested a few times here, and the most recent reversal in trend is here. So I'm going to draw a Fibonacci retracement here. Okay. And you can see that price has touched this 61.8 and then dip towards the 23.6, and it seems like it's on an upward trend. But let's use the indicator to see if there's any clues of. So you can see it here. The price here. Let me use the fast key. So you can see that here, where it's the overbought situation, it actually shows a downward trend. However, here is actually more of a lower oversold, closer to the oversold situation here. And for MACD, it does not show a very strong indication of change in trends. So it will likely move upwards towards the level of 73.66 towards this resistance level. So this will be our first resistance. And this will be. So you actually should put a stop loss. If you have to put a stop loss level, this will be your stop loss at 71.48. So my forecast, I think that it will go up towards this first resistance level. Gold futures. Marcus, for gold futures, I think the live data for gold future is not very reliable. So if I do here, it might not be very accurate. So I think it's not very good to do. We can help you check, but maybe next time if I'm presenting, if I find out more, I'll let you know. Thanks, Marcus, for your question. Yeah. Usman, okay, I'll do your pound dollar for you. This is one of my favorite pairs too. Okay, so let's go. So we close all the indicators to make sure it's a clean slate. Oh, okay, auto. Okay, so for the pound dollar, you can see that if you go to the monthly, it's actually going lower lows, right? Since then, it's going lower lows, price is getting lower and lower. And then if you go to the weekly, however, for here, there's actually an upward trend. And then, so move to the daily for the closest. So we can see that for the daily, price is also going higher. And price level which should look out for is here, because previously price has tested similar levels at here and also here, because you see previously that price has tested this many times. So I'll place a level here. Then we move down to the 4-hour mark, and you can see that so this is actually a upward trend, and this is a downward trend. So the question is whether this is a reversal or is it a continuation of the current trend. So if this is if this is a continuation, so let's do the Fibonacci levels. And okay, so we can see that price has recently tested this level at 61.8 Fibonacci, and it has almost reached this level at 78.6. So we can also draw another Fibonacci extension. Ayo. Okay. Extension here. So if we think that this is a this is the start of a new trend, then this will be the last finished one. So we will actually draw a Fibonacci here. So for myself, I will actually put a area of support here. In alignment with the 50% Fibonacci level and the 38%. So this will be my area of support. Do I change this to green? Okay, never mind. So I'll use MACD. So MACD is actually indicating that this is a recent change in trend and is in alignment with the 61.8. So I will actually put my level of resistance here. Okay, which is in alignment with the 78.6% Fibonacci. So this will be my first resistance, and this be this one. B area, and this will be my first support. Okay. So for pound dollar, my stance is that it will go towards the resistance at 1.38970. So it will go upwards towards this resistance. Alternatively, if I'm wrong, it will fall towards this first level of support. So this area actually between 50 and 38. and it's at 1.37298. So I hope it answers your question, Usman. And okay, we have time for last one, which is cat JPY. So let's go to cat yen. Ah, what am I doing? Okay, sorry for the blunder. Yeah, so we go to monthly and you can see that for monthly wise, the most recent trend is here is on the uptrend. And then we go to the weekly. So you can see a very uptrend, but here seems to be a beginning of a downtrend. Okay, and then we go to the daily. So the most recent dip is here, where we see a change. And then if we go further down, so you can see that it's actually cat yen is actually in an upward trend. So it's the prices are making higher highs. Okay, and then however, you can see that the pace of making higher high is actually diminishing. So it's actually going towards this. So the most recent high points is here. So the pace of the higher high is actually slowing down and it's moving towards here. So this is where I will place my resistance level, the first resistance. And this is where I will place. Okay. So this is where I will place my support. So you can see a very tight range that we're working. And my prediction is that you actually go higher towards this level, 87.892. And then before it starts to dip a bit towards the support level. So I think it will actually go up within this small area, a small area. So I hope it answers your question, Zishan. Yeah, so if there are no more questions, then I will end the webinar and I'll see you guys soon. So stay safe and trade safe. And but I'm looking for trend reversal. I do think that it is going to go up a bit before it moves down. So if you look at stochastics. Okay, so if you're really looking for trends reversal, Zishan, you actually can look at the indicators that we covered just now, right? Stochastics and stochastic. So stochastic and RSI to look for smaller divergence within. So this is actually not very indicative of what's the trend reversal. But if you continue to observe the chart and you spot divergence, then it can be a signal that there will be a trend reversal soon. Yep. I hope it answers your question, Zishan Ahmad. Thanks. Okay. Then if that's all for today, then I shall end the webinar. Thanks guys for joining. Thank you, William. Thank you. Thanks, Zishan. Thank you, William, again. Thank you, Bobby. Okay, goodbye, guys. Okay. Thank you, Yok.